Okay, problem 5-2b, break-even sales under present and proposed conditions. We're going to focus on the present conditions. Howard Industries, Inc., operating at full capacity, sold 64,000 units at a price of $45 per unit during the current year. Its income statement is as follows, and we have our data there. The division of costs between variable and fixed is as follows. And then it gives us a paragraph about some future expansions. I'm going to skip over that because we will not be using that paragraph. We're going to complete instructions 1 through 3. Okay, determine the total fixed cost and the total variable cost for the current year. Determine the unit variable cost and the unit contribution margin for the current year, and the break-even sales in units for the current year. So again, we're only doing steps 1 through 3. So we've got our handy-dandy working papers. Again, I'm going to circle 5-2b so I know which problem I'm working on. Number 1 wants us to determine the total fixed costs and the total variable costs for the current year. So if we look at our income statement and we kind of start on the left here, our first cost we come to is cost of goods sold for $1,400,000. So I'm going to come over here to my paper and I'm going to fill that in. Cost of goods sold for $1,400,000. If we look down our data, it tells us that our cost of goods sold, our variable expenses are 75% of our cost of goods sold. So right here where it says variable cost percentage, I'm going to put 75%. Now, if I take this $1,400,000, multiply it by the 75%, that's going to give me my variable cost. And once I do that, I get $1,050,000. Okay, don't forget when you're multiplying by a percentage, since it's 75%, you'd be multiplying by 0.75 if you're using a calculator, which I did. I'm not doing this math in my head. Back to my income statement. As I go down and find the rest of my expenses, my next one is selling expenses for $400,000. So I come over here and I fill that one in. Selling expenses for $400,000. If I look down in my little chart here, it tells me that selling expenses are 60% variable costs. So I can fill in my 60%. Again, multiply these two numbers together, 400,000 times 0.60, and I get $240,000. Back to my income statement, my next one is administrative expenses for $387,500. Okay, and my textbook tells me in my chart that administrative expenses are 80% variable cost. So again, multiply these two numbers together, and I'm going to get $310,000. Back to my income statement, administrative expenses, total income. So that's all the expenses I had. So my last line here is going to say total variable costs. And I'm going to put a line over here and I'm going to add these three numbers together and I get $1,600,000. Okay. So I found my variable cost of $1,600,000. So in the next step, it wanted me to determine the total fixed cost and the total variable cost. So this one I did. Now I need my fixed costs. So I'm going to start with the same expenses, cost of goods sold. Okay, and we know from up here it was $1,400,000. If I subtract my variable costs of $1,050,000, I'm going to get my fixed costs. So my variable costs are $1,050,000. Again, subtracting these numbers, and I get fixed costs of $350,000. Okay. I'm going to do the same thing for selling expenses. My selling expenses were $400,000. My variable was $240,000. Once I subtract them, I get $160,000. My administrative expenses were $387,500. My variables were $310,000. I subtract them and I get $77,500. I'm going to add these up and I get $587,500. Now, how do I know that I'm right? Okay, how do I know that I'm right? If I take all of my expenses, if I take all three of these expenses, the $1,400,000, the $400,000, and the $387,500, and I add those three numbers together, okay, and I can do it right here on my chart. If I add those three numbers together, I'm going to get $2,187,500. Okay. If I take my variable expenses of $1,600,000, I'm going to put this one up here at the top, and my fixed expenses of $587,500, and add those together, I'm going to get $2,187,500. And this number are equal. So we know that we did this correctly. So we can go ahead and double underline this, because this one there was a way to check it. Okay. Now, let me put that in the video for a second. Okay, step 2 says determine the unit variable cost and the unit contribution margin for the current year. First, we have to know how to find the unit contribution margin. Okay, we learned in our chapter, in our PowerPoint, and in our book that the unit contribution margin is found by taking your sales per unit minus your unit variable cost. Okay, so we're going to start with our sales. Our textbook tells us that our sales were $2,880,000. And our number of units, again, is going to come from our textbook. It tells us the Howard Industries, operating at full capacity, sold 64,000 units. Okay, so that's the number we're going to put here. We're then going to divide these two numbers. Okay, we're going to divide those two numbers, and we get $45 per unit for sales. So then we're going to find our unit variable cost. Excuse me. We learned in the problem up above that our total variable costs were $1,600,000. So we're going to bring that number down. And again, divide it by the 64,000 units. And we get $25 per unit. Now, letter A in our problem asked us what the unit variable cost is. Well, that's what we just figured out. Okay, so this is the answer to A. Now, the question to B says unit contribution margin. We know from our textbook and from our PowerPoint that we find the unit contribution margin by taking the per unit sales minus the per unit variable cost. So if we subtract these two numbers, we get $20. Okay, and this gives us B. So if this is B and this is A, so unit contribution margin is $20. Okay, so there's step 2. Now, step 3 is compute the break-even sales units for the current year. And I put the equation for the break-even equation right here on your paper. You're welcome. So we're going to take our fixed cost, which up here we calculated at $587,500. divided by our unit contribution margin. Oops, which we did not label up here. Unit contribution margin. Sorry about that. Which we know is $20. So when we divide these two numbers, we're going to get 29,375, and I should have put the word units right here. Okay, so we took our fixed costs that we calculated up here in step 1 and divided them by our unit contribution margin, which we calculated in step 2, and that gave us our break even. So this means that this company needs to sell 29,375 units in order to break even. The 29,376th unit starts making a profit. Okay, at this point you guys can go ahead and jump into your assignments and have a great week.